Welcome everybody. This is Dave Osmond at MetaStock. Let's go ahead and just check the audio and make sure that everybody can hear me. If you can hear my voice, go ahead and just type into the chat box and let me know. Alright, looks like we're coming through just fine. Fantastic. Okay, well, we're excited to have you here. Thank you for joining us on your afternoon or evening or morning, wherever you are throughout the world. We're very excited to have Gavin Holmes in our webinar room today, especially on the heels of some announcements in the markets today. I'm excited. I know Gavin is going to be presenting some very exciting things, including some live trading examples. I've got my notepad and pencil out. Whenever Gavin speaks, most of us smart people are generally tuned in to hear what he has to say, myself included. Well, let me give you a brief introduction to Gavin. He's really been involved for many, many years. He's helped thousands of traders in over 36 countries learn how to track the smart money and avoid the tricks that the smart money can play on you. Gavin was taught to trade by veteran syndicate trader Tom Williams. He was very fortunate to have never to have picked up the bad habits that so many of us retail traders suffer from and fight with every day. Gavin is now based in Chicago, here in the United States. He regularly hosts seminars and events, sharing his experience and knowledge developed through talking to hundreds of retail traders each month, most of who are finding the markets a pretty challenging environment. So we're very excited to have him. Gavin's one of our very favorite partners here at MetaStock. And Gavin, we'll go ahead and turn the time right over to you.
Okay, thank you, Dave. And I'll wait for the screen. Welcome, everyone. Let's just do a quick sound check. Can you all hear me? And I'll just add a little footnote to what Dave just said there. I lived in Chicago, actually, for 12 and a half years, but I relocated to the United Kingdom. Obviously you can hear by the deep South Side Chicago accent that I'm not from America, of course. I'm originally from England, and I'm now living back in my birthplace, Southampton, which is on the south coast. So I'm now back in England. We're starting a hedge fund here, and I'm delighted that you're all here tonight, and it's very nice to see you. Now, the first thing I am going to do, because a lot of you are going to be new, and you probably won't know anything about volume spread analysis and some of the things we teach, is I'm going to give you a copy of my book. And I've written 2 books, in fact. And hello, Andrew. I can see a couple of our customers are here as well, regulars who obviously own our software. Let me ask you all a question just to start with. How many of you here currently use volume in your chart analysis? Yes or no? Could you just help me with that? How many of you currently use volume in your chart analysis? Let me just ask that question before we move on. Okay, so you can all see it's a few no's and a few yeses. So, okay, all right. Well, what I'm going to show you tonight, and I say tonight because it's 9:30 in the United Kingdom, where I'm broadcasting from. I'm broadcasting from my trading office, which is actually situated in the town of Lymington, which is on the south coast of England. And I've been here now for about 9 months. My wife just joined me. But I was in Chicago for nearly 13 years. I lived downtown, right in the center of the financial district, and was a trader there. And obviously we've got this software called Volume Spread Analysis. Now I'm going to show you how you're being set up and groomed today with the news from the Fed, which was completely misleading, by the way, because ultimately the news before the announcement was the Fed were going to taper back their bond buying. Of course, they weren't at all, because they've published for the whole year, if you know where to look, exactly how much they're going to spend. But most people don't know where to look. Now, the fact is that the Fed today have encouraged the market participants to get back in. And a lot of people are going to be buying a top if they're not careful. And I'm going to show you why. Now, let me talk about, first of all, myself and volume spread analysis. I am an author of 2 books. My first book is called Trading in the Shadow of the Smart Money. And that book has now sold just over 186,000 copies all around the world. And the book is all about how the markets are actually manipulated. They're moved deliberately by very clever people at banks and institutions. You've probably heard of George Soros, who runs a large institutional fund. But I'm not a conspiracy theorist because I'm a former police officer. Actually, my background before I became a trader was as a police officer, and then I started my own businesses about 20 years ago, and I owned several companies around the world. And TradeGuide was one of those companies, and I became a trader and a fund manager. But what I want to teach you tonight in this 1 hour seminar, because we haven't got a lot of time, is the importance of understanding how and why markets move the way they move. It seems very misleading to many, but the markets have to have losers. It's not like a pyramid scheme where, or a Ponzi scheme. The markets have to have losers. And unfortunately, the media and the news and the information that you're receiving will often mislead you into making a poor investment or trading decision unless you can read the activity of the smart money. Let me read to you, first of all, this is our website. You can go to it at any point. It's volumespreadanalysis.com. Okay, so it's www.volumespreadanalysis.com, and hopefully that will come up there. This is our website. If you want to find it, I don't have time to go into loads and loads of detail about everything I'm going to show you. I'm just going to show you some trade setups, which I'm sure is what you want to learn. But it's very important that after this event, you go and find out a little bit more. And I'm going to give you a copy of my book. Okay, my book is called Trading in the Shadow of the Smart Money. And because you're spending your time with me here, I want to make sure you all get that. And I've actually put the link into the room here, which you should all be able to see. That's a PDF. The book retails for $99 US, and please take that with my compliments. Don't ignore it. Please print it and have a look at it. I think you might be surprised at some of the things you're going to read there, but it will certainly, I promise you one thing, it will open your eyes to the market. I always have a saying, one of my favorite sayings is, your mind is like a parachute. It's best used when it's open. And when we open our mind, information will flow. So let's start with what is volume spread analysis. Most traders are aware of the two widely known approaches used to analyze a market: fundamental analysis and technical analysis. Many different methods can be used in each approach. Generally speaking, fundamental analysis is concerned with the question of why something in the market will happen, and technical analysis attempts to answer the question of when something will happen. Volume spread analysis, however, is a third approach to analysing a market. It combines the best of both fundamental and technical analysis into a singular approach that answers both questions of why and when simultaneously. Now, on the screen, you're going to see a chart on this website of British Petroleum. In 2010, I spoke to the Boston Traders Group at MIT Boston, the Massachusetts Institute of Technology. There were many, many people at that seminar, and they asked me, Gavin, we've seen your presentation, looks great. If you were to buy a stock now, which one would you be looking to buy? This was at the time when British Petroleum said we cannot cap the well, and their stock price had plummeted. However, TradeGuider, using the MetaStock end-of-day data feed, produced a green indicator at a 10-year low. This was called a shakeout in the market. It was a signal to buy, not sell. And in 6 months after they said, we cannot cap the well, the stock price doubled in value. That's a fact. So when you see very high volume, which is the activity of the professional money, the smart money, if they've become very active in the market, there's a reason. They're either buying or they're selling. So there are two rules that I'd like you to write down if you have a pen and paper that may help you greatly to learn the principles I'm about to show you. Rule number one: when strength appears, buying It happens on collapsing prices as the market falls on what we call a down bar. That's a price bar that has closed lower than the bar behind it. Now, most technical indicators will be giving you sell signals as the price falls because they'll be using moving averages, stochastics, but they will not be giving you the truth, as I'll prove to you. So we buy on down bars. It's the very opposite. When weakness appears, rule number 2, it appears on up bars as the price is rising, not falling. Because professional money, smart money as we call them, have to sell into the rising price and encourage you, the investor or trader, to buy from them based on the news, which we've seen today, and they're some of the greatest trade setups I have ever seen in the next 2 weeks. I can assure you, you're going to see the best trading in the next 2 weeks I think we've ever seen. And I'll show you why in a minute. So, this method, volume spread analysis, has not been around for just a few years since I've been involved. It's actually been here with us as human beings for over 100 years. Now, some people say, well, don't be silly, Gavin. Why would a method that's over 100 years old be even the slightest bit relevant in today's market? Well, I can assure you it is. Here's an article from Business Insider magazine, a very well-respected magazine all over the world. In fact, it's read by millions and millions of people. The headline says, presenting the secret trading strategy from the 1930s that the hedge funders don't want you to know about. It says, the large operator does not, as a rule, go into a campaign unless he, and I'll add or she, sees in prospect a movement of from 10 to 50 points. Livermore once told me he never touched anything unless there were at least 10 points in it, according to his calculations. So writes Richard Wyckoff, the legendary trader who in the 1930s wrote a manifesto that gained him a cult following on Wall Street. Can I just ask the audience, how many of you here, yes or no, have heard of Richard D Wyckoff? Can I just ask you all? How many of you here have heard of Richard Demille Wyckoff? Okay, it's a mix. It's 50-50 so far. Okay. He's a very important legend for those of us that follow volume. In his 1931 book, The Richard D. Wyckoff Method of Trading and Investing in Stocks, a course of introduction in stock market science and technique. It's out of print and somewhat difficult to find these days, although not impossible. But even in 2013, hedge fund managers still swear by it. One of the key takeaways from the book is that if you want to succeed, you have to learn how to recognize the professionals and understand what they are doing. That's what those who follow Wyckoff do. They watch the large operators. Wyckoff walks us through the process of how a large operator will manipulate a stock or any instrument, in fact, including Forex, up or down, so that next time one sees it unfolding on the screen before his or her own eyes, he or she can react accordingly. Let me ask you all a question. Please do answer. What is your ultimate goal when you trade and invest in the markets? What's your ultimate goal? What do you want to achieve? Retirement, that's a good one. Barry says more money. To make money, says Carolyn. Quite right. What do you really want though? What's the ultimate goal? Ask you all. I mean, I know my goals. I've got a trading plan. I've got a written life plan for me personally about what I want to achieve. You see, Dale's put a great question there. Profit to outweigh losses. Of course you do. Right. To give up work, Roshan, that's exactly what I've done. I no longer work. I trade and I have a fund and I work from home. I'm a free spirit. I don't have to rely on a 9-to-5 job. I've created freedom from trading and multiple other income sources. And I believe that's important. But ultimately, to beat the market, there you go. That's a great one. Like that a lot. To beat the market. Okay. So what is the market? It's an interesting scenario when we look at it. It's a competition, isn't it? It's making money or losing money based on your decision process, your mental processes that you go through when you decide to go long or short or to buy or sell an instrument. Now, the problem you're going to find and the issues you're going to have is the information that you are going to receive, which, because we're human beings, we see and we hear and we talk. That's our communication process. So the information we get from the media, from the brokers, from all of that will give us an opinion, which will usually be wrong, as I'll prove to you, almost guaranteed. But let me just give you a little bit of hope. And I don't want to use me as an example because, as I'm sure you'll agree, as the CEO of TradeGuide, I would say that our software works, wouldn't I? Because that's what I'm here to do. But ultimately, I want to show you two stories. And I want to show you the story in the SFO magazine in 2010 of Tim Raymond. Now, Tim was formerly one of the top reporters in the UK, an investigative reporter for a major newspaper, which shall remain nameless. But he's also a trader. And Tim is a Forex trader. He trades the Forex markets. Let me ask you, how many of you here trade Forex? Anyone? How many of you trade Forex? Anyone? Okay, a few of you. Okay, so a lot of people think that volume is irrelevant in the Forex market. I can assure you it's not, because Tim Raymond won the competition not once but twice, trading real money with a 44% gain in the last competition on his account. Trading using our principles that I'm about to show you. And again, this article is available to you. If you want a copy of it, you can just email my colleague Ken at TradeGuider.com. Okay, he's based in Detroit. He's a full-time trader, but he's also an advisor for TradeGuider. So if you've got any questions, email Ken at TradeGuider.com. He can send you this whole article. I haven't got time to read it all, but let me read this part to you. It says early mentor, and I've highlighted it. In 1998, Raymond had the good fortune to connect with Tom Williams, the creator of volume spread analysis. I rang him and he was very reluctant to sell me his software, he said. Trading is very difficult, you know. I insisted and agreed that I would pay £5,000 in installments, Raymond says. These days, if I'm asked by someone who is starting out in trading for advice, the first place I send them is the TradeGuider website, which is my website, by the way. For me, it demystified the markets to a great extent, Raymond says. And that's what I want to do for you tonight. I want to demystify these markets so they make sense. And I've got two things to show you, which will prove to you there is a way to demystify. Now, in this particular article, a World Cup trader, Earl Ehrenler, who came second in 2012, actually, again, trading live money. He did very, very well, but he also uses the Wyckoff method. I'm willing to trade any market when I see a trading opportunity present itself, says Earl. In his studies, and he talks about Wyckoff, who I'm going to talk about tonight. In his studies of the markets, Ehrenler came upon the book Master the Markets by Tom Williams. Okay, Tom Williams is the man that taught me everything I know, and that's his book. He began using the methods from this book in June 2007, and he credits his reliance on this approach, which includes the Wyckoff theory, as one of the reasons he began to see consistent profitability, which you've all said you want in his trading. Since the end of 2008, Errol has been trading full time. He retired from the rat race. This is his first year in the World Cup Traders. And he actually, as I said, he was trading futures and the Forex. The methodology involves analysing the interaction not only of volume, closes and ranges of individual price bars, but also of rallies and pullbacks. Okay, I'm not going to read again. That article is available to you while you're here. Now, let's go and look at a TradeGuider chart before I introduce the MetaStock chart, because everything that's in these charts from an indicator perspective, which I'm going to talk about, we've built in to the MetaStop platform as what we call an add-in study. A study. We call it the Smart Money Tracker. Let me ask you all a question. See if you can go back in time for a minute. I want you to go back to August 2011. Okay, August 2011. Take your mind back. Now, the stock market on the beginning of August 2011 had some very bad news about it. Does anyone remember what happened in August of 2011 to the markets? What was the news that caused the stock market to fall and gold to rally? Does anyone remember? Let's see if anyone remembers. Obama said something. Well, it was a bit more than Obama, actually, in this case, Barry. Think very closely. It's very important. If you want to become a professional trader and make money, you've got to look at the past and see what the market did. It wasn't quantitative easing. What did the S&P say about the American government? The S&P, what did they do? The UK did, Roshan. Exactly. The UK lost its trouble, but so did America. It was the first week of August of 2011. Now, on that week of August 2011, what was the safe haven that apparently traders and investors were flocking to? That's a good word. They were rushing to buy this instrument because it had been in a bull run for about 10 years. Can anyone remember? Yep, you're all getting it. It was indeed gold. So on your screen, you will see I'm projecting a chart on the left, the weekly chart of the E-mini S&P futures contract. On the right is the gold futures contract, okay, traded on the COMEX. This is traded on the CME group. Now, at the bottom of your screens here is what we call volume. And I'm going to bring them up and make them very big so we can all see them. Okay, so let's move my cursor out the way on each one to the right edge of the chart. Now, when we look at volume, we're looking at the amount of orders or activity going through the exchange. And I can absolutely say without any hesitancy that if you are analysing charts without volume, you're missing a vital ingredient and a clue to what the professional side of the market are up to. So let me ask you all a question. We'll start with the E-mini chart, the S&P futures contract. This is the volume at the bottom of the screen. Does anyone notice any very unusually high volume, and at what date do you see it? Please type in. Do you notice any unusually high volume, and at what date on the chart do you see that? Come on, there's more of you here. Where do you see that high volume? Look at the chart. This is a very important thing. Where do you see the massive volume? Well, I mean, look, I'm not sure if you can see this on your chart, but I can certainly see it. Here's the volume at the bottom of the screen here, right? Let me just show you it. There. Where do you see the very high volume? Okay. Do you all agree then? It's here. Does everyone agree with me that it's on this bar right here? Yep. Massive volume. And Dave says if you click the full screen button on the top to enlarge it, you'll actually see the screen full screen like I'm seeing. But it's definitely there. Okay. Now, what do you all notice about the date of that very high volume coming in, which incidentally is on a down bar after a decline in price? We call this a shakeout in the market with VSA. It's professional money buying, which caused a new high in the S&P today, a record high. We are in a raging bull run because professional money bought knowing the economy was going to improve dramatically when everyone else was in fear. So do you all agree here that that is the highest volume on the chart? It's on a down bar as the price has fallen. It's closed on its high and we call it a shakeout and the market has had a massive rally. Do you all agree with that statement? Yes or no? How do we know it's buying? Good question, Barry. Okay. Where does the price close on the bar? Does it close on the low, the high, or the middle? Where does it close? Okay, now, that doesn't immediately mean the market's going to rally. I'll tell you why, because often when you see this, it's a weekly chart, the market will move up and down while they buy more. But what do you notice about the volume here, Barry, compared to the volume there? We call that a test. Notice it's lower, but it still closes on the high of the bar. All right, so now we've got what we call a test, but the biggest clue is that bar there. Look at all the volume the previous weeks. What do you notice about the volume into the top of that bar? What do you notice, Barry, about the volume on that bar? Is it high or low? Decreased massively. And the next week we close higher, confirming that there's no more supply or selling on the downside from the big players in the market because they've already bought in the background. And the fact that you can't argue with is the market has rallied. So rule number one, strength appears on down bars when you know what to look for. Now, rule number two, what can you see any high volume on this chart around the same time? Can you see any high volume? No, it decreased into the same area, Barry. So you've got an increase in volume as they buy, and then they test that level. And again, if you read my book, it's going to be much clearer to you. They test that level before the market rallies. Okay, but now we're looking at gold. Do you notice any high volume on this chart? Yes or no? Where do you see it? Where do you see it? Here? Yep, okay. Now look at the date. Look at the date of these two high volume bars coming in. It's exactly the same date as the high volume came in here on the 12th of August, telling everyone to sell stocks because stocks were going to collapse. Everyone was told to buy gold because gold was a safe haven. Now, let me ask you all a question. Do you think gold was a safe haven at that level? Yes or no? Was gold a safe haven on the 12th of August? What do you reckon? Do you think that was a trap from the professional money encouraging you to buy? And look at the volume. They need you to buy from them. But here's the really bit that sticks in people's mouth a bit. They say, well, hold on a second, Gavin. And I did a seminar in Poland in front of several thousand people. I showed this. They said, Gavin, wait a minute. We had all the top banks around the world recommending gold as a buy. And I hate to say this. And I said to them, well, who do you think was selling to you, the public? Here's the headline. Look at the date. It's the same week, right? Goldman Sachs are raising the price of gold as a forecast. It's a trap, Johnny. Of course it's a trap. Once you understand volume analysis, you change the game. You become a contrarian trader, which is what Wyckoff was in the 1930s. It's what Tom Williams was in the 1970s and 80s. It's what Gavin Holmes is in the year 2013. I look for the traps and I trade against them. And today we've been trapped. There's a big trap coming. I can assure you. Don't be fooled by fundamental analysis, because what happens is, the worst part is, the technical analysis will confirm it, because it's looking at the past price. And Goldman Sachs look extremely clever here when they say prices are going up, and a few weeks later prices do go up a bit, but it's just for more selling. Okay, no demand at this level. And look at where the price of gold went. And today, on this news, they've marked it up again. So you'll notice that I'm clicking on indicators. Okay, and these are not buy and sell signals at all. You must never just say red sell, green buy. That's not what this system's about. This system is about a combination of indicators at certain levels which tell you where to go short and where to go long. But markets are accumulated, which means bought, and distributed. And it doesn't happen overnight. It can take weeks. In fact, we saw the price of gold didn't collapse until this signal here at the same price level, and then it collapsed. Now we've got another setup on gold, which is coming on Friday and Monday. It's massive. I mean, massive. Now I have a trading alert service, and I use the MetaStop platform to assist me. That alert service sends an email out to our customers who subscribe to tell them that there's professional money accumulating or distributing. So let me show you this whole system that has been built into the MetaStop platform. So first of all, can you just tell me, can you all see the platform? This should be gold on the 240-minute chart. So this is a 4-hour bar. Can everyone see that before I carry on? So we're now moving over to the MetaStop platform. Can everyone see this? I don't want to start until you can all see it, because what I'm about to show you is a very important development in what we've done with MetaStock. Okay, good. All right. So I'm using 4 time frames. 4. Okay. Now you're seeing one at the moment, but actually I'm using 4 time frames to get my alerts. Now I'm going to start by showing you the biggest time frame. I'm going to ask you for your observations on this time frame. Now, all these dots, or I call them diamonds, and red indicators here are exactly the same thing that you saw in our TradeGuider software, which retails now for $2,500 US dollars. We've built it into the MetaStop platform for you to try. Now, first of all, we've got a number of proprietary things that are built into the platform here that are only available from TradeGuider, and that measure what we call bullish and bearish volume. Now, at the bottom of your screen, you're going to see what we call the volume thermometer. And overall, from this move here to this move down here, apart from today where we had a spike, we have been in what we call a bearish market. The diamonds are red, the bars are red, which means we, as traders, only look for shorts in a market that's trending down. Okay, so that's the first rule that we follow. We trade with trend. We don't try to be clever. We try to trade in harmony with the river. Imagine this is a river that's flowing. You want to short when the market spikes up, not down. Most traders short the market as it's falling, only to find the next bar stops them out as it goes back up. You will learn, if you read my book and you study this plugin that we've got for MetaStock, that you short as the market rises. So you're not shorting as it falls, you're shorting as it's going up, but in certain places. Now, you'll notice that the volume thermometer produces a histogram, as we call it. So it measures bearish and bullish volume. In bullish volume areas, if you see a green indicator, we can left click on it and you'll see it comes up with and let me just put it back on there. Sign of strength. Okay, so right there. Now, if we come over here and left click, we're going to see the same dialog boxes and descriptions that are built into our core platform are here for you in MetaStock. And more importantly, they're not telling you to buy or sell, they're telling you to read the market. What is the market telling you about itself at that moment in time? What is the market telling you? Well, I'll tell you what it's saying to me at that moment in time. It's telling me at that moment in time that we're in a bull move, we're moving up, and as the market's pulled back, there's buying into this move. We get two green signals in an uptrend in a bullish area. It's time to go long. That's a setup. That's a specific setup. Now, in a downtrending market, because gold began to sell off, we get to what we call signs of weakness. Now, we had one actually yesterday and one a few weeks ago, and we have an alert service where we can tell our customers who subscribe when these signals are appearing and when to short them. Okay, so here we can see one, sign of weakness number 7. Supply coming into the market. What does that mean? Simple. The markets move on the imbalances at all moments of supply and demand. If supply enters the market, it means sellers are coming in to overcome the buyers. So we have an alert which tells us when that happens. Now I want to show you an alert that I actually did yesterday to short gold prior to the news. And if you go to our website, www.tradingthemarkets.com, what we're going to do for everyone in this seminar, and only people in this seminar, is offer you an opportunity to get the MetaStock plugin and our scanners if you subscribe to one of our alerts, and that is $99. It's a flat fee. Now, when we see a setup, we have a panel of 8 people watching the markets at all times, and we have an alert system. And what we've done here, you can see on this alert, we have it all date stamped with the time it happened, so you can go and verify it. You can view the video. In fact, I've made this particular video from yesterday a demo video. It lasts 8 minutes, not long, and it shows the setup. And how did it turn out? Well, 10 minutes after we sent the trade alert out, we saw a no demand bar. And that means that the market was marked up by the market maker with no volume, meaning it's a weak market. And Barry, you can go and check them all out for yourself at the website. You can check them, where you can see some that are in progress, some that worked, some that didn't work. You go and look for yourself. And you can view the video, the time that we sent it, and you can also view the result. Now, we don't get it right 100% because no one ever does in trading, but we're pretty close. We're about 84% of accuracy in our trades. And you'll also see with a lot of the trades, I actually trade my live account with our group as we're trading these. So we're trading this with real money ourselves. We're not just sending out alerts that don't exist. We're sending them out with our own money in the market. And the idea is to teach you that the alert service is not to throw you a fish. That's not the purpose. It's to teach you to fish, meaning every video has educational value behind it, so that you're not having to spend 50 hours of study to learn this. You can do it very quickly. Now, with the MetaStop plugin, what we've been able to do, as you'll see, is use what we call multiple time frame analysis to determine when the market is moving in harmony. Now, what I expect in gold in the next week is falling prices, not rising prices, because we've had a markup today on very high volume. Now, if I look at the chart here, you can look at any of these charts, but what I see is the biggest picture to me is the biggest chart. And if we look at the 240-minute chart, we've had a markup, but we're still in a downtrend. So professional money, as we know, we're up here now. Look, we can see where we've gone, right the way up to the 1363, I think it is. Professional money have marked this price up, so I know there's an opportunity for them to sell. So the trade alert that I'm looking at, if I look at the hourly chart, is selling. not buying. Notice the indicators are telling me at these levels that the market could be sold off. Now, I would never ever short until this trending system changes to red. And it has to happen on the following time frames. Notice we've been red all the way down. There's the massive volume. Everyone thinks that's buying. It's not. I can guarantee that's selling. And if I see the market, what I call change behavior on the different time frames. So here's the time frames that I use. I like to use a 15-minute chart. As you'll see, these diamonds have to change to red before I even consider a short. You never short against a markup, otherwise you're going to lose money. It's a bit like going to an auction house. The market's the same. They mark the price up. The public, who know no different, see this volume as buying. They think, great, the Fed have decided to continue with their bond buying. This is going to be good for gold. And the price went up. Oh, I better buy some. Rubbish. Absolute nonsense. That's not the way it works. So you have to wait, though, because they can still mark this up further. Gold could go to 1400. So we wait for what we call a change in behavior in the time frames. We wait for the change in behavior, meaning that the red diamonds, which are on the 4-hour chart, are confirmed on the 60-minute chart and confirmed on the 15-minute and the 5-minute chart. And of course, at the moment, they're not. At the moment, it's still pushing up. The best trades, when you learn VSA, are when the market rolls over and trades to the downside. Now, I'm showing you gold here in MetaStock, but I could be showing you the British pound currency futures contract, the Forex contract. I could be showing you a stock, Microsoft, which I've been trading. And in fact, let me show you that. That's a good alert. I did an alert a couple of weeks ago in Microsoft. I'm going to go back now and show you the TradeGuider chart. And I know I'm limited for time. I've got about 15 minutes left, but I just want you to understand how the market works, because if this gets you inquisitive, then I strongly suggest that you find out more by looking at tradingthemarkets.com. But look at the Microsoft chart on a 4-hour time frame. Now, we've given a short trade and a long trade in this market. Okay. Now, first of all, what do you notice about the volume on this bar, everybody? What do you notice about the volume on that bar on the 4-hour chart of Microsoft, which is a US stock? What do you notice? Well, there's a number of things about that volume. I mean, it's massive. I call it a Yao Ming bar. It's a gap up bar. But what was the news on that day that was perceived by the media to be bullish? Can you remember? 23rd of August 2013. What was the news that was perceived by the market apparently to be bullish? Yeah, well done, Raymond. Very good. Yep, change in management. Now, if you switched on your CNBC, any of your things, all we saw was the reporter saying the markets responded very bullishly. Everyone's buying. They think Microsoft's going to go to, I actually heard $38 in a week. Our Trade Alert service, go and check it. It's there as a recording. In fact, you can actually go and view the demo. On that day, recommended a short trade because of this signal. It's my favorite. And Wyckoff, in his day, traded this signal and made a lot of money just trading an upthrust when the news is good. Now, the volume, if you think about the laws, that we are governed on this planet, whether we like it or not, by universal laws. I know you all understand, or maybe not understand, but know you are governed by the law of gravity. You will all accept that because you're not floating off into space. If I asked you to explain it to me, you probably, unless you're an absolute genius and a scientist, would have trouble explaining it. But in the markets, there are always 3 universal laws that are at work. And if you can read them, you have an edge over the general trading public. The first law is the law of supply and demand. We all hear about it. So, I remember in 2008, we heard that there was a real serious lack of oil, and oil was going to go to $200 a barrel. Remember it well. And the OPEC was reporting we're running out of oil. Oil could go to $250 a barrel. Can anyone tell me in 2008 where oil went after that news? What was the price? Did it go to $250, $300, or $350? Does anyone remember what the price of oil went to after that news? Well done, Kelly. Spot on. You're obviously a crude oil trader. I was using a bit of subterfuge then. It didn't go to 200, no. It didn't go to 350, no. It went to, Kelly was absolutely right, by the way. It went to $34, in fact, $33.68 a barrel. Okay, can this work on the E-mini S&P? Sure. I'll show you that in a minute. It works, and again, in MetaStock, I can show all these charts. I just haven't set them all up in chart books for the E-mini, for the Microsoft charts, all of it. It's brilliant. And the data feed, I have to say, Tom Williams, who taught me to trade, said, Gavin, the most important thing about trading and investing is to have a first-class top data feed. Otherwise, you could be misled because they do mess around with the volume. We have tested about 60 different data feeds, and we have partnered with MetaStock as our preferred feed because it is by far the best volume data in the market today, by far. So don't care whether you're trading with eSignal or wherever you're trading, this is the best data feed, and it's the best value, in my opinion. In relation to the setups that we send you, the volume is what we look at. We're not interested in, Microsoft even is most definitely long, but I wouldn't do it tomorrow. Wait for the pullback. Again, I've got a trade alert that will go out on Wednesday on Microsoft. I'll tell you what happens, Eden. The market is marked up like today. Okay, everyone gets bullish at the top. It'll pull back. It will pull back. Okay, because there's too much supply. We wait in Microsoft for the pullback, and then we look for a signal. It's called a test in a rising market, and immediately we see that the alert goes out. Boom! You get the signal. You know then that we're not buying on the high. Don't buy high. If I told you my car was for sale, and you knew it was a Ferrari and I was selling it for $100,000, but actually, guess what? You knew next week I wasn't going to get any buyers at that price. I was going to drop the price to $80,000. You wouldn't buy it for $100,000 even if you wanted it. You'd wait till I got it for $80,000. Well, the markets know, the smart money do the same thing. They mark it up, and then the market comes down. Yeah, so ultimately, this is how the market it works, based on the imbalances of supply and demand. And here we see Microsoft being sold and Microsoft being bought, stopping volume. And yes, it is a long trade. It's going to fill the gap again. But the buying, there's a lot of buying here. So they bought the market on the down bar, climactic action, sign of strength 33, and it's up here. Now, every time we have a signal in the TradeGuider program, in MetaStock, we can actually very simply get the same information, $1,000 TradeGuider program in MetaStock for $99 a month. And here's how. If we look at the shall we? And it tells me here, if you just left click on it, it takes a bit of a while, and it tells me there's a sign of weakness. Okay, and it then gives you the description. It goes to a web page and gives you the exact same information that's in the TradeGuider program. And once if you want to learn, if you're really serious about this, if you like what I'm showing you, and I'm running out of time, and you think volume might be important to you, here's the process I suggest you take. Number one, you've got my book for nothing. Don't do nothing with it because it's got no value to it because I've given it to you. It has got a value, and a lot of people have paid $100 for it. So print it or read it off your iPad. You can read it on an iPad. And before you start reading your mind, that's all you got to do. Don't be restrictive. Don't say, oh, well, no. I did that when I first met Tom Williams. Initially, I was saying, what are you talking about, Tom? Volume, if the price is going up and the volume is high, everyone must be buying because the price shot up. But ultimately, I realized he was right. Professional money are selling into the up move. And if you know that, then you are avoiding what we call herd mentality. You're becoming a smart money trader because you're trading against the public. You're trading against the uninformed. Secondly, always trade in harmony with the trend. So when you learn VSA using the MetaStop platform, we can see, and you will learn, that when the market is trending in the same direction in 3 time frames out of the 4, you get your highest probability trade setups. And number 3, if you want to learn this, in tradingthemarkets.com, our website, we're offering you our MetaStock plugins retail for $1,500. That's what we sell them for. But we're giving you the opportunity to get them for $99 for the whole month. So when you subscribe, and here it is, to any of these markets, we cover Forex, futures, stocks, silver and gold, Australian stocks, and we've just added the UK market. If you click on subscribe, you'll see, because of this webinar, we're giving you an opportunity to get our smart money tracker for MetaStock at no additional charge. So you get the alerts, and there's 10 a month for each market minimum. We actually average about 16, 17 a month. And you will actually get the data feed included. In fact, MetaStock have done a deal with us where once you subscribe, if you're not a current subscriber, you will get 3 months of data for the price of 1 month. Or if you want the whole MetaStock package, 3 months of MetaStock for the price of 1 month. And as I said, for the first month, we're going to give you the VSA study as part of the price. Now, what you'll get with that is 7 webinars every 2 weeks. And these webinars last an hour each, and they're live trading. A lot of them, not all of them, but a lot of them are live trading. And we put our live account up in front of you. We show the signals appearing, and we show you how to trade them. Now, I can tell you, do we always make winning trades? No. There are times when the market moves against us. We close the position because I have a trading plan which allows for risk reward. I never risk more than 2.5% of my trading capital in any one position. Once it gets to that, and if I'm not making money, I just close the trade. And I'll teach you how you can do that. But I do find there are higher probability setups. And one of the highest ones is when you get a very high volume bar on a very narrow spread. Okay. Now, someone asked me to look at the E-mini today. Okay, and I will do that before we wrap up. And I'll do it in TradeGuider because, again, it just shows you all of this is built into the main trending systems that I'm showing here are all built into the MetaStop platform. Now, if you want a demonstration of that and you've got more questions, then can you please email my colleague Ken, who's got the MetaStop platform. He's been trading for 15 years. He's based in America. I don't have the time, unfortunately, because I'm running a fund to take calls and take inquiries, but Ken looks after people. If you put a phone number in there, he will contact you. He can answer all your questions, and he can also take you into the live market, show you the platform, show you the setups. He's a very good guy, very kind with his time, and a good friend of ours. So the S&P, let's go and have a look at what's happened. Well, first of all, we'll take the 4-hour chart. We've broken out. We've made a new high. Now, that's not particularly surprising based on what I showed you on the weekly chart. Professional money have been buying, and the Federal Reserve have been pumping a significant amount of money into the market. But do I think that we'll go higher? Sure. My point and figure charts, which is a separate thing that I use, project the S&P to be around 1758 in 6 weeks. So I've already got real projections, and those are based on strategies that have been around for, again, over 100 years. But you'll see we always want to look at the dips in the market. as the market comes down, it comes down, and strength, as I mentioned earlier, or buying, happens as the market falls, not as it rises. I put a link up, Kelly, earlier to the book in the room. Let me try and do that. Did everyone see the link to the book? Did you all get that, by the way? I did put a link up to the book earlier on. Let me see if I can find it again, and I'll try and put it up. Okay, Kelly's asking, could you put it up again? Sure. Okay, it's here. There you go. I've just put that back in there for you, Kelly. In case you didn't see that, can you just confirm you saw that? That's just a straightforward download of the color version of the book. It retails on Amazon, but you've got that with my compliments for being here tonight. But let me summarize what I've discussed tonight, okay, because that's probably a good thing. First and foremost, we've partnered with MetaStock because A, we believe in the integrity of their data. B, we love their platform, and Tom Williams and myself use the platform, so that's the second reason. Third, we also have an end-of-day software program. I haven't even had a chance to show you the scanners in here, but I'll try and do a quick stock scan for you now. And I'm using a scan of the stock market to find what Wyckoff would look for over 100 years ago, which is stocks that are acting stronger or weaker than the parent index. Now you can see we've pre-built this so it works with MetaStock files. Now that is because we again rely and know and trust their data. So we load the index, and I was looking at the Australian index earlier, but let's do the US market for the moment. Let's do the S&P 100, and you can see here. What I mean, you can do any market. Yeah, I mean, let's have a look at. Let's go and do the S&P 500 then. Okay. And we'll put the parent index in, which is here. Okay, and we've got the data up until yesterday. And we'll add all the stocks in the folder. And I'm using the TradeGuider end-of-day software here, but I'm using it with MetaStock data. Okay, I don't have time to show you what all these things mean, but trust me, when you get the software, it's all, if you're using the end-of-day software of TradeGuider, which you can find more about at www.tradeguider.com. That's where you'll find more about what we do. You will see there that we have an end-of-day program that scans for stocks that are acting stronger or weaker than the index. It's going to be very interesting how this scan appears tomorrow. You click on Done. It's now scanning the MetaStock files against the parent index to find stocks that are holding their level, meaning every time the parent index falls, there are certain stocks that refuse to fall with it. Those are the ones you want to buy, not the ones that continue to fall. Most people think that you buy a stock that's got lower in price only if it's acting stronger than the index. Do you do that? That's a pleasure, John. No problem at all. So what's happening now is the scanner is scanning all the MetaStock files to find which stocks to buy or sell over the coming weeks. And this again is what we do with our trade alert service, is we scan for you, and then the panel of experts decide which stocks are acting stronger or weaker, and then we send you a video. It's tradingthemarkets.com is the website. Okay, so that's going to finish shortly. And we'll get a set of results on the left here that will tell me which stocks to look at. So it's come up with, actually I remember seeing the Best Buy earlier. You can see this stock, look, clearly, if I remove the comparison chart, is in a very strong uptrend. Okay, we've got signs of strength, which means buying indications in an uptrend. Okay, that's my favorite signal, by the way. I just happened to find that one. It's a test in a rising market. The market falls on reducing volume, narrow spread, and we can see that since it came in, the market stays green, the diamonds stay green, and again, very, very good volume data from MetaStock. All right, I'm run out of time. I said I'd keep it to an hour. Let me take any questions before I wrap up. It's 10:30 in the evening here in the UK. We have a YouTube channel which has got a lot of stuff on it as well. It's just www.youtube.com/TradeGuider, and there's a lot of free information on there that will help you to find out more about volume spread analysis. Good, thank you, Roshan. Well, look, I try and give good value, and we try and teach you the truth. The truth is out there, as Mulder said, but most people, unfortunately, don't see it in the market because there's a lot of snake oil salesmen in our business. There's a lot of rubbish out there. There's a lot of people, selling stuff with promises of riches. I'm not going to tell you how much money you can make with our software. I don't know. I'm not going to promise you that if you buy the MetaStop plugin, you'll make 500% next month. I don't know. The truth is, I don't know, because everyone has different account sizes, different personality, different loss tolerance levels. Some people are gamblers. Some people are great traders. We're all born differently. What I will promise you is we'll tell you the truth, we'll show you the charts, and we'll prove to you what we're telling you is correct by sending you our trading alerts, and you can judge it for yourself. We're not always right, but when we are right,